Today, there is an important update that many seniors across the United States need to clearly understand. Two different types of payments are moving through the system, and they come from two different federal agencies. One agency is responsible for retirement, disability, and survivor benefits. The other agency handles taxes, refunds, and certain stimulus or credit payments. These two agencies are the Social Security Administration and the Internal Revenue Service. Even though their names are familiar, the way they operate is very different. Recent updates about payments, credits, and benefit adjustments have caused confusion, especially for older adults who are seeing deposits from more than one source. This video explains what is happening, why it matters, and what every senior should know to avoid mistakes, delays, or misunderstandings. The Social Security Administration, often called Social Security, is responsible for retirement benefits, Social Security disability insurance, survivor benefits, and supplemental security income. These payments are typically made on a monthly schedule. For most retirees, the deposit date depends on the day of the month they were born. Some individuals who began receiving benefits many years ago are paid earlier in the month. Supplemental security income usually follows a fixed payment schedule. These payments are not tax refunds and they are not stimulus checks. They are earned benefits based on work history or financial need depending on the program. The Internal Revenue Service, known as the IRS, is a separate agency that handles federal tax collection and tax refunds. The IRS also processed stimulus payments and certain refundable credits in recent years. When a senior sees a deposit that is not from Social Security, it may come from the IRS. This can include a tax refund, an earned credit, or a previously issued adjustment related to a past filing year. The key point is that these agencies operate independently. One does not control the other, and one cannot answer detailed questions about the other's payments. Recently, many seniors have noticed situations where they receive two separate payments in the same month. One payment may be their regular Social Security benefit. The other may be a tax refund or credit adjustment from the IRS. In some cases, these payments arrive within days of each other. That timing can create confusion. Some individuals believe they are receiving a bonus or an unexpected increase in their retirement benefit. In reality, these payments often have different purposes and different rules attached to them. Social Security benefits are based on a worker's lifetime earnings record. The amount a retiree receives depends on how much they paid into the system during their working years and the age at which they claimed benefits. Annual cost of living adjustments may increase the monthly payment slightly to keep up with inflation. These adjustments are automatic and announced ahead of time. They are not surprise deposits. When there is a change in the monthly benefit amount, beneficiaries usually receive a formal notice explaining the adjustment. IRS payments, on the other hand, are tied to tax filings. If a senior files a tax return and qualifies for a refund, the IRS sends that refund either by direct deposit or by check. In certain years, refundable credits have resulted in additional deposits. These are not ongoing monthly benefits. They are one-time or periodic payments linked to tax calculations. That is why the source listed on a bank statement will differ. Social Security payments typically show a federal benefit label, while IRS payments show a tax refund description. Understanding this distinction is extremely important for budgeting. A Social Security benefit is a predictable monthly income. A tax refund is not guaranteed every month. Some seniors make the mistake of assuming a larger deposit will continue only to find that the second payment was temporary. Careful review of bank statements and official notices helps prevent financial planning errors. There have also been updates involving Medicare premiums. For many retirees, Medicare Part B premiums are deducted directly from their Social Security benefit before the money reaches their bank account. When premiums change, the net deposit amount changes as well. This sometimes creates confusion because a retiree may see a slightly smaller or slightly larger deposit without immediately understanding why. These changes are usually tied to official adjustments announced in advance. At the same time, the IRS has continued processing backlogged returns and corrections from previous tax years. Some seniors are receiving delayed refunds that were held for review. When these refunds finally arrive, they may appear unexpectedly. This has led to many calls and concerns about whether a new stimulus program has been approved. In most cases, the deposit is simply the result of a previously filed tax return being finalized. For seniors who receive supplemental security income, the interaction between IRS payments and SSI can be especially important. SSI is based on financial need. A large one-time deposit may temporarily affect resource limits if not handled properly. While tax refunds are generally excluded from income calculations for a certain period, understanding the timing and reporting requirements is critical. Keeping documentation and maintaining clear records ensures continued eligibility without interruption. It is also important to understand that Social Security offices do not issue tax refunds. Similarly, the IRS does not manage retirement benefit calculations. If a senior contacts the wrong agency, they may not receive clear answers. Knowing which agency issued the payment saves time and reduces frustration. The name attached to the deposit provides the first clue. Another issue that has gained attention is direct deposit updates. Both agencies encourage beneficiaries and taxpayers to use direct deposit for faster and more secure payments. However, updating bank information must be done carefully. Incorrect routing or account numbers can delay deposits. Seniors should verify all account details before submitting any changes. Once a payment is sent, correcting an error can take time. There have also been reports of scams targeting seniors by using the names of both agencies. Fraudsters sometimes claim that a second payment is waiting but requires personal information to release it. Neither the IRS nor Social Security will demand immediate payment or sensitive information through threatening phone calls. Official communications follow established procedures. Protecting personal information is essential, especially when multiple payment updates are circulating in the news. As inflation and cost of living pressures continue to affect retirees, any news about additional payments quickly gains attention. Seniors often rely heavily on fixed incomes. When rumors spread about extra checks, it can create unrealistic expectations. Verified announcements come through official channels and are typically accompanied by formal documentation. Patience and verification are key before making financial decisions based on unconfirmed reports. The difference in how these two agencies calculate payments is another critical fact that seniors should understand. Social Security retirement benefits are calculated using a formula that considers the highest 35 years of earnings. Those earnings are adjusted for inflation, averaged, and then applied to a benefit formula. Claiming age plays a major role. Claiming early results in a permanently reduced monthly amount. Delaying benefits increases the monthly payment up to a certain age. Once benefits begin, the amount generally remains stable except for annual cost of living adjustments or specific life changes such as returning to work before full retirement age. The IRS does not calculate benefits based on lifetime earnings in the same way. Instead, it calculates tax liability for a specific year. Income deductions, credits, and withholding determine whether a taxpayer owes money or receives a refund. For seniors, common sources of taxable income include Social Security benefits above certain thresholds, pensions, withdrawals from retirement accounts, and part-time work. Each year stands alone in the tax system. A refund one year does not guarantee a refund the next. There are times when both agencies intersect in limited ways. For example, Social Security benefits may be partially taxable depending on total income. In that case, the IRS determines the tax owed on those benefits. However, Social Security itself does not decide the tax rate. It simply reports benefit amounts. The IRS applies the tax law. This distinction helps seniors understand why they might owe taxes even though their Social Security benefit amount has not changed. In recent years, refundable tax credits have provided additional financial support to many Americans. Some seniors qualified for credits if they met specific income and filing requirements. These credits were processed by the IRS, not Social Security. When a deposit arrives labeled as a tax credit or refund, it reflects tax calculations rather than retirement benefit increases. Confusing these payments can lead to misunderstandings about long-term income expectations. Another important factor involves benefit verification letters. Social Security provides official letters that confirm monthly benefit amounts. These documents are often required for housing loans or assistance programs. IRS refund notices serve a different purpose. They confirm tax adjustments or refunds. Keeping these documents separate and organized is a good practice. Mixing them can create complications when proof of income is required. Seniors should also understand how payment schedules differ. Social Security follows a structured monthly calendar. Payment dates are predictable and based on birth dates or program type. IRS refunds, however, depend on when a return is filed and how quickly it is processed. Electronic filing with direct deposit is generally faster than paper filing. Errors or identity verification requests can delay refunds significantly. In addition, certain offsets may affect payments from each agency differently. Social Security benefits can be reduced due to overpayment recovery or specific federal debts. IRS refunds can be offset for unpaid federal or state obligations, child support, or other qualifying debts. These processes operate independently. A reduction in one payment does not necessarily mean the other agency has taken action. Direct deposit remains the fastest and most secure method for receiving funds from both agencies. However, keeping banking information current is essential. If a retiree changes banks or account numbers, both agencies must be updated separately. Updating information with one agency does not automatically update the other. Failure to notify both can result in delays or returned payments. Taking the time to verify deposit information reduces the risk of interruptions. It is also important to understand the impact of income thresholds. Social Security benefits may become partially taxable if total income exceeds certain levels. The IRS calculates that tax responsibility based on combined income sources. When taxes are owed on benefits, the IRS may require quarterly estimated payments or withholding adjustments. Social Security offers the option to withhold federal income tax from monthly benefits upon request. That withholding is forwarded to the IRS, but does not change the benefit calculation itself. Medicare premiums further complicate how Social Security deposits appear. Many retirees have Medicare Part B premiums deducted directly from their monthly benefit. If income rises above certain thresholds, higher income adjustments may apply to Medicare premiums. Those income-related adjustments are calculated using tax return data, but the deduction is reflected in the Social Security deposit. This is one example of how the two systems connect yet remain administratively separate. Identity protection is increasingly important in today's financial environment. Both agencies have implemented stronger verification procedures to prevent fraud. If suspicious activity is detected, payments may be temporarily paused while identity is confirmed. Responding promptly to official notices and maintaining secure records helps ensure continued access to benefits and refunds. Financial planning for seniors should always be based on reliable recurring income first. Social Security forms the foundation for many retirees. Pension income, savings withdrawals, and part-time work may supplement that base. IRS refunds, while helpful, should not be treated as guaranteed ongoing income. Viewing refunds as opportunities to strengthen financial security rather than recurring monthly support promotes long-term stability. Clear record-keeping plays a vital role. Keeping annual benefit statements, tax return copies, and official notices organized allows seniors to quickly verify amounts and resolve discrepancies when contacting either agency. Having accurate documentation speeds the process. Confidence comes from understanding. When a deposit arrives labeled from Social Security, it reflects retirement, disability, or survivor benefits calculated under established formulas. When a deposit arrives labeled from the IRS, it reflects tax-related processing, whether a refund, credit, or correction. Recognizing that difference eliminates uncertainty and prevents rumors from causing unnecessary concern. In closing, two payments from two agencies can easily create confusion, especially during times when financial news spreads quickly. The Social Security Administration provides structured formula-based monthly benefits that form the backbone of retirement income for millions of seniors. The Internal Revenue Service manages annual tax responsibilities and issues refunds or credits when appropriate. They operate independently, follow separate rules, and serve different purposes. By understanding how each agency works, recognizing the source of each deposit, maintaining accurate records, and planning budgets around reliable income, seniors can protect their financial stability. Clear knowledge replaces uncertainty with confidence. Knowing the facts about these two agencies ensures that every payment received is understood, managed wisely, and used to support long-term security and peace of mind.